Good afternoon. This is Randy, and I just wanted to do a quick video and kind of show you why I put a little protection on the InvestSharp trade portfolio, and you could use it as a hedge, or you could take it as a trade. I mean, it's a pretty low risk and pretty high reward possibility. I mean, it doesn't mean it'll work out, but it's still not much of a risk. So here I'm looking at the IWM, which is the Russell. And you can see Russell's pretty weak today. Now there's not on heavy volume, but it's down 1.71% right now. Now you see we've been in this channel down in the Russell, right? Here's the line. This starts back at the end of April, of course, when this whole kind of correction started. Here's channel down. So we hit up against resistance. So if you use Friday's high of 64.53 and give it maybe, I don't know, 40-50 cents leeway, or 25 cents. It's there's no set number here, but I would give it maybe even up to the 65 level, as your stop. But so here's your risk on the trade. Even though if it doesn't work out, we could break out and go this way. I have no idea yet. It's probably going to depend on economic news and politics and currencies on the euro and the dollar. So, but your reward is going to be at least probably back to 59, possibly, maybe more than that if we continue this channel down. Same way, and that's why I bought this October 61 put. And so, I mean, you could still do that now. And again, this would be, out. And I mean, you could lose money, but, there's a pretty big reward in it if it works out as well. Same with the SPY. So if you draw a trend line from here, touch here, touch here. So here Friday, we run into the downtrend line, right? And it looks like we could be in a triangle. And the volume's been pretty good. I mean, I don't really have any reason that, in the, volume, is pretty light right now. So I mean, reason that will break down and fall apart, but it could happen any day. So again, you have your risk would just be over Friday's high. Say it's at, well, let's see, Friday's high was 110.99, so call it 111. So it's say 111.40 or 111.50 would be your stop to get out of your put. And again, like on the SPY, you could buy some SPY puts. I would go, I don't know, buy the 107, 108s or something like that, or 106s, any of these down in here. I'd go to October, just in case we have this slow grind moving up or down, which sometimes we do. So sometimes we chop sideways for a period of time, like up here. It starts wasting away options pretty quickly when we start chopping sideways, chop sideways here. So again, your reward's going to be back down to this area. So, very little risk here, a lot of reward down here. So I wanted to point that out. So, I mean, I think these are still fine. It doesn't mean that it'll be a profitable trade, or, and again, as a hedge, I'll still get back out of it. Even though it's a hedge, I won't leave it on if we do hit the stop areas that I'm talking about. But overall, the market, I mean, it's looking all right. It seems like it has this bullish lean to it, even though we're down some. But I think the currencies, the FXE, we'll look at FXE. So you see FXE, it's kind of went down. It's kind of been in a channel up and a hit on the Euro ETF. Hit, hit, hit. Well, guess where we're at again. And MACD is kind of iffy, turning down a little bit. If this Euro, drops, and then the dollar, which again I don't know that will happen. It could happen. I'm watching the channel here, and then this dollar starts going back up again, which we've got. So right now, we haven't been able to get over the 50-day moving average, which is this gold or orange line on the UUP, the dollar ETF. We hit it there, we hit it here, and we're basically at it now. So if we can break out above that, probably be significant. Probably put a lot more pressure on stocks as well. So it's another thing to watch. And gold's holding up pretty well. And then I wanted to go over just a quick look at the S&P E-mini futures, the ES. So this is a 30-minute chart, just the last 5 days. So we're going along, and this is actually yesterday, or yeah, it was yesterday. The future market were open. So we hit here about 3:30 a.m. on September the 6th. So we hit over here. Here's our high, 107.25. And again, this is 30-minute chart. So then we've hit. We're in this channel down right now. Now, will we stay in it? Don't know. But now we're down in here, and you can see that. Okay, that's not what I wanted to do. Yeah, I guess I can't get to it right now, but you can see that this volume right here, this big volume spike was on the sell side right here. And then as we're going up, the decent okay, but then it's getting less and less as we're going up. Now the volume's just tapered off to nothing. But we're at that lunchtime lull. We always have a lunchtime lull that we don't do a whole lot, and we're kind of in that now. Probably the volume will pick back up here about well, 1 o'clock Central Time, my time. So it'll be about 2 o'clock Eastern. So all right, so I just wanted to show you kind of the risk reward of why it's not a bad idea to go buy some SPY puts or IWM puts or something like that, and you can easily get back out of them. And it, you know, the reward and the risk is definitely there, and because you can easily jump back out, you don't have a lot of risk there. And if we go back down to the trend lines like on the SPY, you know, see we've got the 200-day moving average above us on the SPY. Let's look at the IWM. Same thing here. We ran into the 200-day moving average. So again, you know, possibly get back down to this area. So that's why I did that, and I wanted to show you kind of my thoughts behind that. And I will be back with you as always, either on the main blog or actually I'll be doing the midday market cast here before too long. Thanks.